Okay, good morning. So the market just opened about 20 seconds ago, and we're going to hop over here and look. So what I told our map members, we're gonna do something a little different here today. Before I wrap it up, I'll give you a review of how things are going here. So I'm aware that well, we'll have to see. I'm not entirely sure. I think that the stream might be a little bit delayed, just enough that it would be important for the market. So anyway, we're going to talk through the open here. So first things first, we said this in our map with our map members. We said that the first thing they need to do is get through that 83, so it's 83 here on the open. So they have gotten to 83.75. So we talked yesterday about 84.50 to 85.50. The Globex high is 85.75. The high of yesterday is 85.50. That's going to be important to get through. So they've gotten above 83 by 3 ticks. So we'll just kind of see here. So if they can't get above any of that, then we're going to head a bit lower. And fairly decent chance that they want to come back and test, depending on when it happens. If it's Since we're going to talk right through here at the open, we'll talk about that. But this 70, let's call it 77.50. And so we'll see if they can come back and test this 77.50 at a minimum. So the play here is a short between 83 and 85.50. Somewhere in there you want to be short. And the initial move is down to the 77.50 area. If that scenario doesn't work out, then we will flip that and look for something different. We'd be looking for a buy if they can break out up above 85.50. Just checking out what crude oil is doing. Okay. So there you go, 77.50 to the tick right there. So now we'll see if that, there's probably another tick lower of room, but that would be fine. So it could still come another tick lower, 77.25. Earlier in the Globex session we had, let me just draw this in so you can see it. It's 76.75. So actually somewhere even down to here would be fine, but there's 77.50. So if you look at this, we do have these targets up higher that we've been talking about for a couple of days now. To keep things in context, we have Apple reporting earnings after the close, and then we have Microsoft reporting next week, and we have Amazon reporting tomorrow. Between those three companies, that makes up over 30% of the market. So, fairly important stuff here. Also, all three companies are companies that we would expect that would kill it. Okay, so if you bought 77.50, and usually, we would buy a tick or two in front of that. A couple of things I pay attention to. So here's a couple of tips for you. So I pay attention to the time on the 5-minute chart. Oh, and I don't have that on this chart, but on my other, I have three screens going here, but on my other chart I have the bar timer. We've got 15 seconds left on this one. So, okay, so there's 77. This is what I was trying to say. Somewhere between 77.50 and 76.75, we could definitely get this bounce. I like the timing. I usually want to try, it doesn't always work this way, but getting in around in the last minute or so of the candle, or maybe in the first minute of a new candle. And on the 5 minute chart. And the only reason I say that is because I generally, I don't, what normally happens is when I enter, let's say in the middle of a 5 minute candle, I notice that the moves generally happen at the end. It doesn't mean all the time. I don't know if I've tracked it well enough. That's something I could start doing, but so to me, this doesn't look like it wants to hold, but I mean, there's also not been any real break anywhere here. So there's 76.75. They're touching that right there. There's been some pretty decent buying if you see what's been going on here. There's been some fairly decent buying, but until it breaks, we're not going to assume that it's going to break. It's okay to look at it and think, okay, it's not looking like it's going to get a reversal or whatever, but until it breaks, and even breaking this, it's not like it's a breakdown level or something. If we were to break here, it would just open the door, let's say, down to 74. And then below that we have the CP at 70, but we might see there's a few things. If it breaks, I'll call it as it happens, but 74 to start off, maybe 71, 75, and then 69, 75. That's our CP down there. But so far 69, 76, 75 is holding to the tick. I really wouldn't want to see it come back again at this point, or I would expect that it would come a bit lower. So the buyers have had a bit of success here, I would expect. So we should come back up. We should get 80 quarter, maybe only 80 minimum here. And then we'll have to see if that holds, then we probably are going to come lower into the lower 70s. If that doesn't hold, still got to get through 85.50. Although, if you have been around anything that I've taught for some time now, the more, let's say, support or resistance level gets used, the more likely it is that it won't hold again. So, like, you can do it. You could have sold 85.50. I don't even know how many times in the last 2 days. But at some point, it gets riskier and riskier and riskier each time. So we'll see how this all plays out right here. If they don't get up above that 80 quarter, then we'll see what's going to be next here. So a word about support or resistance is that if it, as far as support or resistance goes, for the most part, it's pretty useless if it's already been established as support or resistance. Because that means it's kind of like everybody already sort of knows about it anyway. And, if what you're really looking for, the whole concept behind, let's say, supply and demand, was that you're establishing an area before it's established as support or resistance. You're finding this area that is, supply and demand. You're finding this area that is going to become support or resistance later on. So that was the idea behind that. So let's see. Okay, so there is the test at 80 quarter to the tick. So it just kind of depends on what kind of trader you are. If I'm going to trade, it's probably going to be something that's going to have, if I'm going to risk a couple of points, I really don't want anything less than, say, 6 points really at a minimum on the S&P here. I really want 6 points minimum in room of where I could, where I could get paid. So if I'm buying 77.50, I really better have room that I could easily get up to, let's say 83.50. And there is a potential, so that's fairly close. You could call it maybe 5 points. You could say maybe back to 82 quarter. So somewhere in there, but I probably would need to take some profit um, around 80 quarter. So there's just not a ton of room on that. And I just refreshed my chart here so that you can see this is actually key turns. I just hadn't refreshed this chart yet this morning, so it hadn't recalculated where it actually was. So we have key turns up here, and we have key turns right here. So they held this, what we talked about here, and we'll see. The problem is for me is that the room from 70, let's say even from 77 up to 85, there's just not a ton of room there. So I'm not really crazy about buying unless I'm just trying to scalp it. Now we do have these bigger targets up here, but we've just tested 85 so many times, and there's plenty of room that we could go test lower. Currently, they haven't broken 80 quarter. Let's see if they get up above here on this push. So there we go. So that they held key turns right here. So at a very minimum, I would probably want to go, if I got in here, let's say if I got in at 77.50 and they probed to 76.75, I probably would at a minimum move my stop here to 76.50, okay? So that would be sort of the minimum there. And then I for sure would take some profit in front of 82. Okay, so there's the punch to 82 quarter. So that's about 5 points, and that would be a good first area to take some profit. And then it better break up above there, and even we've still got a little bit of work to do. So 82 to 83 area, 80 maybe 83 quarter. And then still that 84.50, 85.50, that's been a beast to get through the last couple days. So we'll see how that plays out here this morning. So let's just recap a couple of things. This morning we said need to get up above 83 area. They probed it by 3 ticks, not really broken, not really a huge deal. We said in MAP, we said a 70 or 80% chance, sorry, we said 80% chance they'd come back and test 77.50. And we said they had this 76.75 down here that was on the table that could come back and test. By the way, we said all of this probably 30 minutes before the open. I walked you through it here in real time as it all sort of unfolded. And then we said from 76.75 minimum, it would come back to 80 quarter, 80 quarter. There's the high at 80 quarter. And then said if it would punch through that, we'd probably want to take some profit at 82. So 80. So you just trade it step by step. So if I'm long from 77.50 and 80 isn't enough room to really take any profit, and you have to know what you're dealing with today, and you have to be able to adjust to whatever the market circumstances are that you're dealing with. So you have today here, you have 80 quarter, and maybe that's not enough profit. So you can minimize your risk. Maybe you have a point of risk on the whole trade if you go just below that swing. It's why I'm so obsessed, I guess is a word probably, with getting in at the top or the bottom of a move, because it makes my risk so tiny. If I get in at 79, let's say over here, if I get in at 79, and I put my risk a couple ticks below here, my risk is now almost 3 points. But if I get in at 77.50 and I put my risk down here, my risk is a point. And if you don't think losing 3 times more makes a difference at the end of the trading day, then you have never traded or done math or know how a balance sheet works. So to me, that's why I have really been on this journey over the last decade of being obsessed with how to have the most accurate prices and how to map it out all ahead of time so that I can enter in the best places. So overall, I don't even want to say an uptrend or a bull bias or whatever, because all those are really terms that traders made up to help them understand things that are going on in the market. I am going to say something that could get me stoned and thrown out of many trading communities, but trends are, trend schmend doesn't exist. Trends are what institutional traders invented a word called trends, and they invented a saying called the trend is your friend for all the suckers who would buy or sell after them. So that's the way that retail or that institutional traders are looking at trends. So yes, the trend is your friend right up until it isn't. So I can tell you right now that all the big money institutional traders I know don't care at all about trends. They would laugh at you if you tried to talk to them about trends. Not to say all of them, but certainly a number of them. I mean big money, hedge fund money. There's a lot of prop traders that look at trends and think that stuff is useful. And then so there's that, and then there are probabilities. There's, what the market could do, where it could go, where it's likely or probable to go, and then trading with those probabilities. And it's really as simple as this. The market always, 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 always has a target that it is trading to. And most traders don't know how to get that information. So they guess and use lagging indicators and want confirmation and all sorts of other things because they don't trust what they are able to, the information that the market's giving us. So we, you can call it an up, a bull bias. You can call it an up. We're in an upward trend. Really been in more of a channel the last couple days. But what's important is that we have targets above that have not been achieved. And it's likely that short of some kind of catastrophic event, that any selling that we get in the next day or two would just be for buying. Now, that doesn't mean as day traders we want to buy if it drops 50 or 60 or 70 points. Okay? But it's likely that any selling we get over the next couple of days is eventually, buy the dip. And this is, it's likely any kind of selling would just be a dip. So here's where size makes a difference. So if you're long, let's just call it 77.50, and you covered some at 82, and there's 4.5 points. And then here we are back at 84.50. We could come maybe up to 85.50. Maybe even a little bit higher than that, not a whole lot higher than that before we really start to push again. Also notice we have, oh, you don't see that here. We have, let's move this down so you can see. Okay, so here's 85.25 again. And again, the more times they test up here, the more likely it becomes that they're going to break it. But this thing has been a brick wall that they've been running into. So if you have size, let's say if you have on a 10 lot, if you have on a 3 lot at 82, you got to take 2 off. At 82.50, you got to take 2 off, or 82, you got to take 2 off, and then you have 1 left. So what's your option here? Hold it or take it off. You have one choice. If you have on a 10 lot or a 15 lot, let's say if you have on a 15 lot, and you're long from 77 half, it comes up to 82, you can take 10 of those off. Okay, 4.5 points on 2/3 of your contracts. Now it's up here and you've still got 5 on. So what could you do? You could take 2 off, you could take 3 off, you can hold, you've got a lot of options. You can do a number of different things. But again, there's there's no reason. If you were long 77.50 and you covered it all here at 85, no problem. It's not a bad, not a bad trade. 7.5 points plus. there was a short opportunity at 83 down to 77.50. And so let's just call it 5 points to round it to the more realistic number for what a trader would get. And there's a 12.5 point day, and it's 6:50 my time. And some people are still sleeping. If you do 12.5 points on, we're talking about 15 contracts. If you did 10 contracts, made 12.5 points, you just made $6,000 on a 10 lot. So, and with all the companies out there that offer funding, and if you can pass an evaluation. Okay, so there you have it. So 85 quarter, maybe they could go a tick higher, but they really cannot. This, just to, yeah, they really can't go much higher than that and this not be a break. Initially, it might only be for like 87 area to start off with. It just depends on how much momentum they're able to break with, right? So, um, this 8575 probe in Globex did make me a bit suspicious. It technically did break. Yeah, it broke quite a bit actually. So 8550 only broke by a tick, but okay, sorry. So I was looking over here. So shouldn't be a huge surprise where we just pulled back to. Anyway, all I'm saying is this made me a bit suspicious. The 8575 probe above 8550. One tick is not the most convincing, but it is a tick above 8550. And I know a lot of traders ignore those kinds of things, but that is important. Okay, so look at where they just came back to 82 quarter. And if you've been paying attention to anything I've said in the last 22 minutes, then you would know that 82 quarter was the price that we were talking about this morning. So if they are going to break, that's probably where they would. That's the really 83, 82 quarter in there. That's really the first area. If they don't come back below 83 quarter again, then they'll go push through this. If they do come back lower, it's probably back to that 79.50 or 79 quarter. Okay, so that's what we are looking at there. At this point, high probability that they're going to go to 87. So if you buy 82 quarter, pretty decent chance to go into 87. So let's say you buy 82.50, a tick in front of 82 quarter, and you get out 2 ticks in front of 87. It's about you can get 4.25 ticks out of that, or 4.25 points. So not terrible for your for a scalp on a day like today. Something like that you can size up if you have the ability to do that. And you can doesn't mean you can't hold some and see if they can punch it higher. We do have these bigger targets that we've been talking about. 99.50 and stuff that we've talked about throughout the week. 03 or whatever that is. I don't have it right in front of me right now, but
Okay, my mic died. So now we're over to the Yeti. Might sound a little different. Okay, so, and my mic was charging all night, so not sure why it died. But anyway, that is what it is. So, okay, so what's happening? It does, to me, and I don't know if I don't think I died before I said that, but high probability that they're going to come see this 87 minimum. And they've really been trying to get through that 85 area. So let's see here. There's 85.50. Just to give you an idea of what's happened here. If we go 84.50, we go back here. So we'll just count the attempts here. So 1, this is on a 5-minute chart. 1, 2, 3, and this lasted for like 30 minutes, okay? 4, punched through at one time, and then came back down here. Let's just call this 5, which was like an hour, over an hour. 6, 7, 8, 9, 10, 11, 12, 13, and then this 14th time. So it's been here 14 times. As a general rule of thumb, we would generally say, okay, so there's 86.75. We would generally say that that by the second or third test, that's probably not really a trade you want anymore. I mean, you don't want to keep trying to short up against a level. And today, finally, I think the 14th time it finally breaks it. So we have these 3 CPs in here. Not sure this is probed. We have 87. It's probed just above 87 to 87.50. And generally speaking, with something like this, when they break this, we'll see how there's been so much selling up against this 85.50 area. So we'll see how what that reaction is like. But could just be, if it's not just straight off to the races and doesn't just rip, which it is not at all out of the question at all. And we have a KP up here, 99.50. If we draw in, let's just draw this in. Just draw in the fib in between these 2 levels. We had a KP here yesterday. I think it was at 95 and change. And that's something I'd kind of keep an eye on, that area again today. Again, there's just kind of a bit going on here. We've got this 88, maybe 88 quarter. Bigger picture, there's no doubt we should get back to, let's say, 95 at a minimum. And there's obviously quite a bit more room up higher. So okay, well, I think that gives you a pretty good idea of, for me, how I'm looking at things. If you like scalping, there was a scalp here for a short down to here, and then came right off 76.75 for a real nice buy. And this is something that we can, if you have size, you can just be holding this size ultimately for a move higher, and then you can trail that up if you want. I don't like trailing it. I like taking size off as it moves in my direction. I generally don't like moving my stop up to just get stopped out for less than what I'm already up in the trade. So all right, so there's 88 quarter. We'll see if they can, bust up through that, and if they can, then there's more room up here. We got this 90 quarter, 90 half, and then, which shouldn't be a huge factor as far as a reversal or anything goes. So there's definitely room for quite a bit higher at 99.50. But eventually, we do have that KP up here at 0.75. So pay attention between this, just up in this area. Doesn't have to be to the tick or something, but like just watch up in this area. A little bit later on in the day, it might be 0.4 or a little bit more, but just kind of depending. So pay attention to that area. So hopefully this has been helpful for a pullback. So there's 88.25 right there. For a pullback, let's just assume, I mean, you kind of already have everything we've talked about up here, so let's just talk about lower. If they were to come back and take out this like 82 we talked about, what would be below that? Back down into this, let's see, somewhere between 79 and 78, something like that, if they were to come lower than that. And then down below that, there's a bit of room down to 74.50. We've got the CP down here. That's 69.75. And then that would open, maybe giving this a point or so, and then that would open up the door for down into this area, maybe this 58 area. And then much below that, probably, so you can see down here. So probably much below that, probably down to 48, and then this 40 KP. And I'm not going to try and map out every possible scenario here of what could happen, but I think it gives you a pretty good idea. There's the low tick of the morning session here to the tick, and then there's the high tick to the tick right there, and pulled back to the tick. So plenty of good movement here so far this morning. So hopefully that's helpful. I'll be back. I'll do a review today after the close, and we'll go from there. And if you haven't subscribed, subscribe to the channel, and we will see you later today in the review video.